Data is always manipulated, there's no doubt about it. We've seen this before with data revisions always reporting a much worse picture than initially brought to the public. The only difference is that the revision gets ignored. It's old news. Piles of bad news are inconsequential. All that's important is how soon until the Fed begins QE4. You came here for the truth, so let me unveil that for you. Today I have a few topics to connect together. Number one, we're going to talk about the jobs numbers. I think this is extremely important because of this big news that was just released right now. We are going to look at what the Fed said in their actual meeting minutes. You get the little tidbits on CNBC and Bloomberg, but did you read the actual statement? I'm going to show you some important information from that statement directly. I have a lot more to cover, some charts, some articles. Let's begin right now. US created 500,000 fewer jobs since 2018 than previously reported according to these new figures. This is really huge because it is statistically the worst we have seen in terms of revisions since 2009, right around the financial crisis time frame. This is important because we are seeing these numbers coming out every single month. 200,000 new jobs, 300,000 new jobs. The economy is on fire. We see the breakdown. Look at all the jobs created here and here and here. Unemployment is going to be in the negative at some point, just like all of those negative interest rate bonds. Look at what is happening to the actual data. Nothing makes sense anymore. Let's go into this a little bit. You can see directly from the Bureau of Labor Statistics website, and by the way, this isn't the first time we've seen something like this occur. It does happen. There are revisions that take place all of the time, but I just wanted to show you specifically that the data is coming right from the BLS, the same group that is reporting every single month. Here you can see 501,000. Now this is important to see because it is showing us that when they initially give numbers out, they might report 200,000 new jobs. That is what the market trades on. This right here had absolutely no impact on the market whatsoever. That's how absurd the data that we receive is. Think about that. We initially get the number, it comes through, the market trades higher on it as a result. Then a revision comes through and actually shows that it is much worse than what we were told, and the market doesn't react at all. It completely ignores it. That to me shows you how fake these markets are. Why in the world would it trade up in the first place if it's not going to trade down as a result of those numbers not being accurate? That's what I want to know, but of course we know what's really going on. New data reveals slower employment growth. We extrapolated revisions going into 2020. Maturing labor market will mean less job growth going forward. Here you can see the difference with these post-2019 benchmark revisions and where this particular company believes that they are headed. This is just showing you a breakdown of these particular revisions. Retail down 146,000, professional and business services down 163,000, leisure and hospitality down 175,000. There are some images here if you want to check it out for yourself, but I think you get the point. Take a look what also happened today. We had the 2 and the 10-year once again inverting. Did the market trade on that information? No, not at all. Completely ignored it. So this right here was the catalyst for the 800-point drop that we saw just recently. And now the same event occurs and the market went up as a result. Something is completely screwed up. There is no way to deny it. Look at this information and try to argue this. What we are seeing right now is all based around the Federal Reserve. Everything that they do and say moves the markets. Nothing else has an impact. It might have a short-term impact, but it has no impact as far as these investors are concerned. Bond market yield curve inverts signaling Fed may be too slow to cut rates, risks recession. But of course, again, the market didn't come down as a result. This is just an article. Yes, there are some analysts talking about that, but the Federal Reserve has been trying to calm the markets this whole time. It was actually interesting in their statement. They didn't necessarily say that they are going to begin QE4. They did talk about this mid-cycle adjustment using similar language this time around. They gave a breakdown of their reasons of exactly why they went ahead and did this to cut rates by 25 basis points, not by 50 basis points, why they wanted to actually stop the quantitative tightening even earlier than was ever supposed to happen. All of this added together, the markets simply love it. They absolutely love it when the Federal Reserve is getting real easy, and we know how easy they have been in the last little while. Fed says July rate cut was, quote, recalibration and not part of a preset course for more easing. Market didn't care, ignored that, and looked at something else I'm going to show you in just a moment here. At the bottom, just wanted to note very quickly that the minutes also noted that a couple of members wanted a 50 basis point cut. Of course, they want to do this. They want to look good because when you cut rates, that appears as if you are trying to help out the economy, but of course doing damage in the long term, but nobody wants to hear about that. Ultimately, what this comes down to is that the actual real people out there are concerned about a recession. That's why they're cutting interest rates. That's why they have to go ahead and manipulate data. That's why all of that, which we have seen in all of these other videos that I have done, and of course, I'm sure you're doing your research on your own time, people know what's going on underneath all of that. Now, I'm going to show you an updated analysis in a matter of time. I'll get you that data. For now, if I put my mouse over this, you can see values for this point have partial incomplete data available. I will bring this to you when I get some updated numbers, but that is as of August 2019. So we haven't finished the month yet, but I just wanted to bring this to you now because I think it is very important with the video that we're doing here. And of course, this comes from Google Trends. So if you want to ever see this, just go to trends.google.com and it shows you what people are searching. This is a real indicator to me because it gives you an idea of what people are talking about, what people are thinking about. You can see this broken down by the sub-region, District of Columbia being the top, Delaware, Rhode Island, Maryland, Connecticut, going down the list. In this here, it also gives you the related queries. So we are seeing 2008 recession, new recession, recession of 2008, and so on. So you go down this list here just to give you an idea of how things are really and truly unfolding at this time. Most people, they have no idea what in the world is happening, but they hear of this or that and then they start doing their searches. This is going to actually give you some insight on that. If you haven't been aware of this already, I'm sure that you will find it interesting. Okay, so here we are. We're looking at the federalreserve.gov directly. This is important to see what the Federal Reserve is actually saying, what they're doing, and even though this data right here, this statement, comes after everything had happened, it's still so telling. We're not going to be able to find out exactly what they are thinking. We're not going to know about all of the $16 trillion bailouts that are happening in secret. We're not going to find out about which institutions are given money on a daily basis. But at least we get some data, and that is part of the puzzle. Check this out. They're talking about their actions throughout this period and how, look, inflation is so low. Why didn't we print more money? If you can believe it or not. So check this out. Participants further observed that such inflation risks, along with several of the other perceived risks of providing substantial accommodation throughout this non-traditional policy tools that they've been using, including possible adverse implications for financial stability, had not been realized. We printed a whole bunch of money, we reduced interest rates, and yet the inflation is very low. That's basically what they're saying. In particular, a number of participants commented that as many of the potential costs of the committee's asset purchases had failed to materialize. The Federal Reserve might have been able, check this out, I can't believe this. The Federal Reserve might have been able to make use of of balance sheet tools even more aggressively over the past decade in providing appropriate levels of accommodation. Check this out. We're talking about directly from the Federal Reserve's own statements themselves. We could have printed a lot more money because the fake core PCE inflation rate that we use is still very low. This inflation rate is probably going to go into the negative at some point, and they're going to be printing quadrillions every single month, and they are still going to tell people that inflation is low. How stupid do they think we are? So as far as I'm concerned, the market read this information and they loved it. They know that they are simply waiting to hit that trigger on QE4. It is only a matter of time. That's why they're not worried about the jobs numbers. That's why they're not worried about any sort of revision. They are not worried about the bond market and the yield curve inversion. All they care about is QE4 and bringing interest rates down into the negative. It is going to happen. We just have to wait and see. Of course, they are going to destroy the currency. They are going to destroy the financial system. But all of this is just a series of steps in their whole plan. There's no doubt about that. And of course, you already know that. Our research showed that the Fed achieved soft landings, as in 95-96, when it started rate cut cycles the same month the inflation downturn signals from the US Fig arrived. However, recessions followed when the rate cut cycles began, with lags relative to those downturn signals. Check this out. What really seems to matter is not when the Fed stops rate hikes, but how promptly it starts the rate cut cycle following the inflation downturn signal. So in the current cycle, that inflation downturn signal arrived in September of 2018, but the rate cut cycle has only just begun with a 10-month lag. As we noted many months ago, over the past 35 years, such belated rate cuts have always been associated with recession. This comes out of the ECRI, bringing you this information directly. I just wanted to show you that because it is so telling. It is so important to see this historically. We've been told before, oh, that happened in these years, that happened in these years. But when you actually look at the data and understand what happened those times, you start to realize the truth. And last but not least, just wanted to show you this very, very quickly. Hedge fund portfolio density has steadily risen. Weight of the top 10 positions in the average hedge fund long portfolio. This has increased to 69%. There are fewer and fewer stocks being purchased by the majority. Of course, this fluctuates time to time, but I just wanted to show you that because you can see that this is becoming a problem. It's not a good thing. Fund portfolio turnover has been declining for a decade. Okay, since the financial crisis, we have watched this continue on and on and on. Hedge fund quarterly portfolio position turnover for all positions, it's at 26%, largest positions 15%. Of course, they are hanging on to the FANG stocks and all the other big names out there, simply hoping and praying that the Fed keeps printing money, that the central banks keep doing the same and buying up the shares of these US corporations. That's all for this video. If you found it informative, don't go anywhere until you hit that thumbs up button. I really do appreciate it. I created a course for all of those out there who are saying solutions, solutions, solutions. This is a free course for everybody to learn exactly how to build a business. On Amazon, it's at the AmazonGPS.com. You have to see this. People are joining up like crazy right now. For those of you who have joined already and you're trying to get on the insiders email list, there are hundreds of people today that have not acknowledged the email that was sent to them. It is probably in your junk or spam folder. You need to click on confirm my subscription. This is very important or you will not get the emails. So if you are waiting on an email, go into the junk or spam folder and click on that button. It is essential. If you want the financial education you were not taught in school, these two books have everything you need. We're talking about how to profit. We're talking about the 4 asset classes, tax incentives, everything you need to know. Check them out at the link in the description if you want the audiobook that's available at themoneygps.com. The manufacturing industry, the trucking industry, every type of transportation, the RVs, it's all sinking, it's all contracting. Definitely watch this video, click on it, and I will see you over there.